Okay. 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 So, sorry guys, we're gonna have to do some live sound tests here because I just moved, and so the ambient sound has changed and the microphone placement has changed. So I gotta adjust some stuff. So you guys tell me. We'll do it live, and you guys tell me what you think is best. Can you hear me okay now? No chair ritual? Yeah, no, it's still squeaky. But now I'm on hardwood, so it's not as squeaky. But now you get to hear my chair rolling across the hardwood. Probably a little bit of an echo and a little bit of a heat vent. I have a heat vent, or like an air conditioning central, whatever, like a little air vent right next to my desk. So hopefully, can you guys hear that? Can you guys hear the air vent? Maybe get the mic slightly closer. I'm not gonna get the mic slightly closer, but I'll turn up the volume on it. Is that better? How's that? What about that? Test, test, test. Sound, sound, sound. My voice is here. Test, test, test. Can you hear the vent? Yeah, well, not really much I can do about that. I guess I can turn off the air. Hold on a second. Let me go turn off the air so it'll stop blowing. Okay, that should turn off here in a second. So just some housekeeping stuff. Yeah, so obviously I haven't been here streaming for the past few weeks because I've been, just doing some traveling and getting set up in a new place. So the new place I have Google Fiber, so there shouldn't be any issue with streams dropping anymore. It's all fiber optic connection with Google, and it's like 1,000 up and down, so it's pretty solid. I've been doing speed tests left and right, so that's good. The other thing is probably going to bring back crypto and games, and the connection, like I said, is a lot better now. So it'll make it more feasible to have a higher quality stream. Won't be dropping frames or anything like that. It should be straightforward. And what else? Yeah, I'm gonna try to pick back up on the schedule and stream Mondays and Fridays. Obviously today's Tuesday, but it's because I was moving my shit yesterday, and some asshole decided to drive by on a motorcycle closer to the street now because I'm like in a house. So I'm gonna try to figure out some stuff sound wise, as they present itself, like douchebags on motorcycles driving by in a residential area for no reason. Okay, what else? Oh yeah, so in the top right corner you see the coupon code for my trading group. The coupon code is BearHug. It's valid until, or it's good until the end of the month. So if you're interested in joining, use coupon code BearHug at bitcoinschmitcoin.com and get $50 off your first month. All right, sweet. So let's get down into it. Let's talk about some chats. My screen is a bit blurry. Okay, well that's not good. I don't see that. Refresh your stream. If you just refresh the stream, it should clear it up. Like refresh YouTube. I don't see a blurry screen or anything, so I'm not really sure how to fix that. I think that might be something on your end. Okay. All right, so let's look at the macro view as we like to do, and let's act like we know what we're doing here. So take off the Bollinger Bands, and okay, what else should we make this naked? Yeah, let's make it naked. Okay, so we see right off the bat, there's like moving trucks. Oh, also, guys, I gotta warn you right off the bat. my dog is adjusting to having, you know, having her eyes able to see everyone who walks by. She's chilled out a bit, but if she starts barking, it's because she sees a dog and she wants to like go say hi. But obviously she can't because she doesn't have thumbs and she can't open doors. So she's stuck inside and she's frustrated. And if you wanted to say hi to someone and you were frustrated, I think you'd probably bark too. All right, let's get to it. So one of the first things we notice on the daily chart is we see this death cross. Is this gonna work? Sweet. Okay, we see a death cross. So this is the 50 EMA here, 50 EMA. Here's the 200 EMA. And we see here what's called a death cross. And it's when the fast moving average, which is in our case the 50, crosses from the top and drops below the slow moving average. This is generally a, you know, a bearish sign. It has the word death in it, right? Death cross. And what that generally means is that the longer term trend is no longer providing support to the current market, and the slower moving average, which is more relative or more relevant to the current trend, is now starting to drop below what should be the you know, the projected uptrend from the slow moving average, but it's now finding resistance here. It dropped below, and then of course we see the death cross here. So what that basically means, that doesn't mean that just because we had a death cross we're going to plummet, but it is a sign that you know, obviously on a macro scale we're lacking bullish pressure, and you didn't need me to tell you that. I mean, obviously the price has just been dropping for the past 4 months now at this point, right? So let's go back and look at some historical context of the daily death crosses and what that can mean. Okay, so we see here on the previous parabolic blow off, this is the previous bear market here. We see that, so obviously, right, just because it has a death cross doesn't mean, it's like I said, it's gonna just dump. Because here's an example, right? So here we had a death cross. The price rallied and it stayed above this previous little like V bottom thing here, and it found support, and then it rallied to a new high actually and retested previous resistance levels. So it's totally possible this is actually like in our cards right now, and I'm going to make an argument for why I think this is possible here in a second. But I think it's important to note that just because you hear the word or the phrase death cross, that doesn't mean that like, oh man, Bitcoin's dead. No, it just means that like, you know, it's lacking the bullish pressure it once had. So that's all that means. It's just a pulse on the market, and it doesn't necessarily mean that it's just like doom and gloom from here on out. Okay, so let's zoom in a little bit to the 360. Actually, sorry, let's look at the 1 week. I think that's important too. So here's the 1 week. So these are weekly candles. Every candle is 1 week of time, and let me close Steam here. Every candle is a week of time, right? A week of market movement, and we can see here that, you know, we dropped below the weekly 50, which is pretty bearish because on the weekly candles the next line of support is going to be here. But it's like doing like a little tweezer bottom kind of thing. Not the best tweezer bottom. We would want to see something with like, you know, you don't really want to see wicks on top like this. We would want to see full-bodied candles with wicks on the bottom for a tweezer bottom. But you can see here that, you know, the wicks are really poking down, not really making a whole lot of downward progress for the last three weekly candles, which makes sense because in general, Bitcoin doesn't like to go below the weekly 50 EMA. When it does, it requires a lot of effort, and it often gets retested. So here's an example right here, right? So first time it bounced off with this little wick, just like we did here. Boom, boom. We didn't bounce off quite as strongly as this one did, but you can see here that like even the last time, right in here, it didn't quite just break through and have a full blown, you know, follow through. So just because we're sitting right through here, that doesn't mean we're not going to bounce, but it also means we're not gonna not go down. So what does that mean? It just means that keep an eye on this, because if this support level breaks, expect a strong move down, because if we break below this previous low, that is most likely going to have a really strong follow through. So let's look a little bit closer on something like the 6 hour. Actually, let's look at the 12 hour, because there's an interesting B-band trend. So on the 12 hour, we see a really nice squeeze, right? And all that means is that the market's consolidated. That's all that means. It doesn't mean that the price has to go up. It doesn't mean the price has to go down. But what it does mean is that on a macro scale, something like the 12 hour, I consider it to be macro for Bitcoin, that it's very consolidated. You can see volume starting to taper inward. If I could pull up my Wacom tablet, that'd be sweet. But I can't. I need to figure that out. I need to figure out why I can't. There we go. Why I can't always pull it up. So we see here a really nice squeeze. So whatever the move is going to be, it's most likely going to be sustained. So let's look at some historic B-band squeezes on the 12 hour just to make an argument, right? So here's a squeeze, right? Price moved up for a long time before it reconsolidated here, which obviously led to a strong move down. Again, a squeeze here, which consolidated for a long time and then ultimately moved down strongly. Here again, you see the B-band squeezing, and then it had a sustained move downward. Again, we see B-band squeezing, a sustained move downward, and now we're seeing B-band squeezing again. And these are actually the tightest they've been in a while. So you can see here at the bottom, this is the B-band, we call this BBW, Bollinger Band width. Basically just tells you how wide the Bollinger Bands are. So obviously if we're here, the BBW is going to be much wider, hence higher value. And as it squeezes here, the BBW is going to have a much lower value. So just a general quick overview of Bollinger Bands there. So what can we take away from this? That the next move is most likely, I want to emphasize most likely, not that it is going to happen, but it is most likely going to be a sustained move. So if it pops up, we can expect a sustained move for a couple of days, most likely. And if it breaks down, expect a sustained move downward as well. And also something in the bull's corner here. So just like how I said before, how the Bollinger Band squeeze tells you that a move is likely to occur. The bulge, which is the rounding of the Bollinger Bands, this part right here, quite literally where it's bulging, it tells you that the move is most likely ending. That doesn't mean that it's ending in a direction. That means that it's ending until the bands are consolidated again. So here, for example, here's the bulge. We see that it made a new low, but it retested the high before continuing downward. Here we see the same bulge here, boom, boom, and here, boom. So my guess is that just based on Bollinger Band analysis, that I don't think we're going to see a move down. I think most likely we're going to see a move up. Where that move up goes, we can talk about that in a second. But right now, we want to focus on directionality, not necessarily price targets at the moment. We just want to agree on a consensus that something is either bullish or it's bearish. So before we go on to that, do you guys have any questions about anything I just talked about? Just have any questions? No questions? Really? Because you guys have been blowing up my Twitter, and unfortunately I haven't been able to answer everyone because I've been moving and traveling, like I said. So Wyckoff analysis. That's not a question. Hidden divergences. Guys, these are fractions of sentences. Incomplete sentences. Let's get some thoughts going here. What about Wyckoff analysis? What about hidden divergences? Come on. Wait, so are you saying we are going into bull? No, that's not what I'm saying at all. I'm saying that we could see a bounce. Yeah, something like this right here. Or maybe something like this. But we don't know until it starts, right? What would be our next target on the downside? Okay, so that's a good question. So next target on the downside, would be here. So here was the V bottom, right over here on this side. The next target on the downside would be a retest of this low right here, the 6K bottom, the 100% retracement from here to there. That would be the next test. Okay, so if it does bounce, just sell it. That's not what I said at all either. On the 4-hour/12-hour oscillators are increasing and one can, so hidden divergence is correct. What do you think? I don't know what that means, dude. Is your market maker long theory, how's that going? Okay, we'll talk about that in a minute. In your Bollinger Band analysis, what in your Bollinger Band analysis is leading toward a move up again? So it's not necessarily leading to a move up. It's that it's leading toward a lack of momentum in the move down. So if we look at what did I say? It was a 12-hour. So if we look at the 12-hour, obviously we see the squeeze, right, which means that the market's consolidated. But if we look at that in relation to the daily candles, we see that the daily candles are bulging, the B bands are bulging, and they don't seem likely to move downward, just because a Bollinger Band bulge usually indicates decreased volatility in a given direction. In our case, the direction was down, right? Because we started here and moved downward. So this shows us a lack of momentum in the downward direction, and so the volatility is kind of dying out in the downward direction. So that is one way to look at it. If we see a profound amount of selling, that could obviously change, but for the time being, it doesn't look like, based on the Bollinger Bands on both the 12 and the daily, that a move downward is likely. If anything, it'll be a bounce, maybe a retest of the daily midline would be a nice target. Before moving down again. Could you explain a bit more in depth of the Bollinger Band form? What do you mean by form? What would you say that? Would you say that the April 2013 fractal has been invalidated? No. I think there are similarities to it, but I'm also not looking at the 2013 bear market to be like a roadmap for what we have to do. I think that's one way the market could play out, but I'm not looking at that as like a roadmap or guide, to what to expect. Do you see a diamond forming on the bottom? And if so, how do those generally break up or down? A diamond forming on the bottom of what? In what time frame? So the question is about the Bollinger Bands. Yeah, so I'll just go over like a really quick overview because this is specific. So we see a Bollinger Band. The way Bollinger Bands work is they're a measure of relative volatility. which is just a fancy way of saying, is the move likely to continue going up or continue going down, or is it losing momentum and it's going to round out, consolidate, or reverse, right? So Bollinger Bands have a really simple anatomy, but the way that you can interpret it is really nice because it's relative to the current trend. So right now, if we see a Bollinger Band squeeze, right? So that means the bands are moving inward, something like this, for example, right? That means that the market is consolidated and it's ready for another move. Whether it moves down or up is to be determined, but it's just like, it basically is a flag to say, hey, start looking at the market, start developing, start positioning yourself because a move is about to happen. Okay. Next is the bulge, which is this part, right? So it goes from the squeeze to the bulge. And John Bollinger, who you should follow on Twitter if you don't, his name is John Bollinger. He refers to Bollinger Bands like this. He says, the Bollinger Band squeeze is the birth of a move, and the Bollinger Band bulge is the death of a move. So whenever you see a move in a given direction and it starts to bulge, that's likely indicative that the move is lacking momentum to continue downward. So here's an example, right? So we see the bulge here, and then we saw a nice little bounce here because it wasn't having the steam to continue downward. And that was, if you're playing the Bollinger Bands, you would have seen that coming right around here because the Bollinger Bands were starting to round. The BBW was starting to round. And so, a reversal was likely. And if you would have noticed the Bollinger Bands, you would have had a nice entry for a reversal pattern there. So similarly, we have something in common with the previous move in that the daily Bollinger Bands are rounding, which means it has more consolidation to do. And I would expect to see, a retest of this midline, which is pretty common for Bollinger Bands. So usually before it moves down, see a retest of the midline. Again, you see a retest of the midline for this big bounce, a retest of the midline before the pull down. And I personally, I'm currently long. I caught the long on the breakout, but I'm looking to probably close and flip short right here, right on this like 7K midline area, or at least take at minimum take profit. And that's for a couple of reasons. One of the biggest reasons is that there are a lot of similarities here between the current move and the previous move. The previous move being this guy. Oops, let's go ahead and make you a little bit bigger. So the previous move was this. You see this giant bear pennant right here. Let's change this to orange. Make you a little fatter. Okay, so we see here, got this big bear pennant right here. And we'll do a little bit of numbering. So we'll say 1, 2, 3, 4, 5, 6, break. Okay. Well, we see something very similar here. So we see 1, 2, 3. Let me go ahead and remove this line real quick. Sorry, this is not supposed to be there. So I'll renumber this again. So we see 1, 2, 3, 4, 5, 6, break. So now we see 1, 2, 3, 4, 5, 6, which is going to be a new high relative to 4, and then a breakdown. Well, what would be the new high, right? So the new high would be most likely where this green line is, which is the top of a trading range if you're into that, which would be somewhere in here, which is like the low 7K value. Well, the low 7K value also happens to be the daily B-band midline, right? 7,400. The low 7K values is the midline of the Bollinger Bands on the daily. So this is, there is what we like to call a confluence of evidence and confluence of indications there that give a really strong argument for a retest of the 7K value before continuation of the downtrend. don't think we will get an up dress out of the TR. Maybe. So the trading range he's referring to is, so currently, so let's get into some Wyckoff stuff, because it's been the foundation of all of these moves for the past 4 months. And if you're not studying your Wyckoff, you've been having a really horrible time. But if you have been, then this has been a very profitable market. So I'm gonna go ahead and paint you a little picture right here. Let's make you a little smaller. Okay, so something that's a really good common practice whenever you're first learning, and even when you're still learning, trading ranges and Wyckoff analysis for market trends. Make the bullish and the bearish case, make the distribution and the accumulation case, right? I like to label the green is going to be obviously the accumulation case, and red is going to be the distribution case. So you want to draw the anatomy of a trading range, but label it so that you're being objective here. And here's one way to view it. Okay, so if we're looking at it through the lens of just accumulation, so accumulation, right? So we see a selling climax, we see an automatic reaction, secondary test, secondary test. So now we see a nice outline for this trading range. So we see the outline here and the outline here. These represent, this, and this. All three of these represent lines in the sand where the composite operator or the CEO has said, I'm not going to buy above this, I'm not going to sell below this, and anything above this is my attempt to short people out. So as we go through this trading range, we see a couple of interesting things that could apply to both accumulation and distribution, right? So far this stuff is all the same, and that's fine. But what's something that's very interesting is that we saw a new low here, which can be interpreted as a spring, which means that we're going to push up to a new high, or it could be interpreted as a sign of weakness. So the whole time, whether you took a long here or not, that's a great play. Whether you're playing with playing the accumulation argument or the distribution argument, going long on the bottom of the trading range is something it's one of my favorite moves to make with the trading ranges. It's a fake out. People get trapped. It's a giant bear trap. And this is one of my favorite plays, is to catch this little knife, because it usually rallies pretty hard. And that's just what it did, right? So whether it's a spring or a sign of weakness, there's almost always a retest of the top of the trading range, which is what I was banking on, right? So we see the spring / sign of weakness, and it rallied to the top of the trading range, which is this green bar right here. This could have been interpreted as a major sign of strength, or it can be interpreted as an upthrust. It ended up making this like super clean head and shoulders pattern here, and then it retraced to retest the bottom of the trading range again, where it made this little like bear pennant thing that broke down. It faked everyone out and made this little like spring thing here. It went up, and now it's basically doing the same thing again. But something to note, and this is one major argument for a bullish case, is that it's making higher lows. So we see a low, 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 low. It's not breaking this trend, which is the argument for accumulation. Typically with accumulation, the spring is the terminal shakeout. It traps all the bears, and it gets everyone nice and stuck in these bearish positions, down in here, down in here, down in here. And ultimately what we're looking for is something that like what happened this morning, which is something like this, right? So we made a new high here. It occurred on high volume, and never returned back below that value, because it's quite possible that this is about to begin markup for this micro accumulation. Okay. Sorry, I know I just went over a shitload of information, but that is the argument for why I think we're going to return to the 7K value. At minimum, return to the 7K value. From there, I'll evaluate. But for the time being, I'm currently long Bitcoin. I'm going to take profit right on here, right in this TR upper boundary, which is like 7.2-ish. And if it looks like it's going to continue, then I'll add to my position there. But this is my take profit point, is looking at 7.28, basically bottom of this head and shoulders area. So here's a question. What do you consider is a good long strategy result on historical data for Bitcoin USD? I got a 90% profit ratio, but I'm unsure if it's only due to exponential. I'm not really sure what you're asking. What do you consider is a good long strategy result on historical data? I don't understand what you're asking. What usually prevents a CO from acting in the exact opposite way of what is highly likely from a TA perspective? What usually prevents a CO from acting in the exact opposite way? Am I just like having horrible reading comprehension? Because I don't understand this question either. Maybe I'm just like burned out from moving, but I don't understand these questions. What usually prevents a CO from acting in the exact opposite way of what is highly likely? These questions are not normal at all. Okay, thank God. Okay, I thought I was like going crazy. I'm trying to read them, but like I don't understand them. Which phase of accumulation do you think we're currently in? I think we're in phase D. I'm currently agnostic as to whether this is actually going to be distribution or accumulation. I think it's a really strong case for accumulation, but there's also a strong case for distribution as well. I mean, like this last point of supply here, this is like textbook sign of last point of supply, right? So we failed to retest the upper boundary of the TR. We rose and had a giant sell-off right here, just below the TR top, which is, this is really good classic last point of supply behavior here, where we see a strong sell-off here. And if we retest it up here, this would be just another last point of supply before an ultimate drop. So I see an argument for both, and I'm not sold on either one of them at the moment. The CO is watching this and will drop it on you. Nah, I'm not worried about them. I got their fucking number. I got them figured out. Hey Schmidt, is the diamond formation breaking up right now to reach its target of approximately 7,100? What diamond are you guys talking about? I don't see a diamond. I don't see the diamond you guys are talking about. So anyway, that's at the moment, that's my current play for Bitcoin. I'm looking to, I'm long right now, but I'm looking to take profit, in the low 7K values, right around the daily B-Band's midline. But something else that I'm currently playing right now that you guys might be interested in is this guy. So here's Ether Bitcoin. And after it's been getting the living shit beat out of it, it looks like it might have found a temporary bottom, a local bottom, on a macro scale. And I'll go ahead and mark this up for you guys, but here it is, all right? Which is interesting, because if we extend this, boom, right on top of the previous trading range. But here, let's go ahead and talk about this for a second. So on the 2-hour time scale, this looks like classic accumulation, like straight up accumulation on the Ether Bitcoin pair. So we see a trading range here. Let's make you green. So we see a trading range here. Boom. You know, we see the spring, high volume spring, the jump across the creek here. And here's the major sign of strength here. And it's just now breaking up out of this giant bull pennant on good volume too. It's just now starting. It hasn't reached its new high, but I'm expecting this thing to run. Like I'm expecting really good things from Ether Bitcoin at the moment. That's not to say I'm expecting like a full-blown bull market like it was last year, but it looks good. Like that's a really good play for, you know, for the time being. That's what I'm playing. I'm playing Bitcoin and Ether Bitcoin, which is funny because if we look at the Ether USD pair, it looks like shit. You know, like if you're looking at Ether Bitcoin, or if you're looking at Ether, just the Ether USD pair, it's not exactly obvious what the hell's going on here. You see a bit of a trading range, obviously, right? Here, let's make you. We see a bit of a trading range here, but it's not entirely obvious what's going on until you look at Ether Bitcoin, and then you start to say, huh, there's an obvious flow of capital from Bitcoin to Ether Bitcoin, which leads me to believe that Ether is going to see a decent run. And there is a flow of capital between the coins. You got to be able to catch it. And right now, this looks like accumulation. It looks like accumulation. You know, it's sitting right on macro support. If you're familiar with my charts on this from a while ago, here's macro support right here, and it's a great candidate to start, you know, buying up some Ether, because so here's the previous trading range. This was accumulation, right? Reaccumulation, and now we're sitting right on top of it, right here. Boom. So you can see here that, you know, obviously this was like a massive reaccumulation. So compared to that, it's very small, but, you know, it's a good short-term play for the time being. Again, I'm not saying it's going to go on a massive run like it did from here to here, but, you know, you can see a really good bounce off of it. And the Ether Bitcoin pair looks really solid right now. What are your thoughts on Ripple accumulation? Honestly, I haven't looked at Ripple in a while. Damn, it's at 49 cents. Yeah, I mean, once Bitcoin like really just started shitting, I just stopped looking at alts altogether. So, okay, so this is interesting. Ripple on the Bitcoin pair is seeing a solid fucking squeeze right now on the daily B bands. So, you know, if we refer back to our previous conversation, very consolidated, volumes consolidated as well. You know, we're going to see a good move off of it. Whether it's up or down remains to be seen. It's very possible. There are a lot of people arguing this, so there's a bit of a fractal here that is seeing the squeeze, and it looks, you know, bullish, but it could pull back. I'm not looking to touch Ripple at the moment. I want to see a solid accumulation phase for Ripple, and I'm just not seeing that at the moment, so I'm not looking to touch Ripple. I'm looking at Ether, I'm looking at Bitcoin, I'm looking at EOS looks really good at the moment. A couple other coins look really good, but I'm not trying to fill my bags and sit back, because I don't think Bitcoin's done going down. But I think there is an argument for a temporary little bottom here. Do you draw with a regular mouse? No. I use a Wacom tablet. Do you see still it's going to the 4,500 area? Yeah, I'm not ruling that out whatsoever, like at all. There's a garbage truck over here. Oh, guys, get ready for my dog to bark. There's a fucking FedEx guy just honking at someone on the road. She's being good right now. But if I swear to God, if this guy comes up on the porch, my dog's gonna flip her shit. Just wait. So I'm apologizing in advance for your ear holes. But like I was saying, I'm not like trying to like accumulate alt bags and like sit back on my investment because I don't think Bitcoin's done. But there are some good plays. You just gotta find them, and right now, you know, Ether's looking really good, and so is Bitcoin. What is your bottom indicator called? So this is just BBW and %B. They're just overlaid on top of each other. Can you even see that? So %B and BBW. They're just overlaid on top of each other. Like a lot of times people have it like this, like separate. So you see %B and BBW. But I just merged on top of each other. So I think it looks fine and it takes up less space. What are some good resources to learn Wyckoff? So most of what I've learned has been from Bruce Fraser, and for whatever reason, the pedantic assholes on Twitter like to rib me about this. But I suspect that's probably because they're fucking losers and, you know, little neck-bearded assholes that lost all their money because they're in full-blown Bitcoin at 20K. But, yeah, I mean, I think Bruce Fraser is one of the best resources I've found. I mean, ever since I learned the Wyckoff material that he provides for free, by the way, on his blog series on stockcharts.com, it's increased my profitable plays like drastically, and it's helped everyone in my trading. So like any of the guys, I mean, anyone who's in my trading group can tell you, you know, if they're in the chat, they'll tell you straight up that like ever since we all started learning Wyckoff and implementing it with the trades, we've been able to see things that everyone else can't see because, you know, they're only looking for standard patterns, only looking for triangles, they're only looking for stuff. But once you start looking at the market through a trading range, it's just like eye-opening to you know, to see what you've been missing. Trading ranges are like, in my opinion, the most important material you can learn as a trader. How do you spell it, Bruce? Yeah, so here, I'll show you a link right here. So this is a great one, Bruce Fraser. Fraser. And he also has like a bunch of free material on YouTube, which is great too. Like he'll go through in real time and break down different examples of stuff in the stock market. He doesn't do crypto, but he does stuff in the stock market, which is the same. It's the same shit. And then every week he publishes a blog. So he's just like giving out all this free information. The dude's awesome. Dude's awesome. And honestly, like, I'm not one for reading because I like visual stuff. So I really like the way that he explains stuff conceptually and you know, visually on his on both his blog posts and his on his videos. Do you ever test your indicator/oscillator decision making on historical data? No. Like with the Pine editor on TradeView? No, I don't. Well, I don't know what indicator/oscillator you're talking about. What would you be looking for to see if we will break out of this trading range to the upside? a lot of volume and price spread. So that's one of the key concepts of Wyckoff analysis, is knowing how to look at the market through the lens of effort versus result. So effort versus result, which basically is like saying supply and demand. And here's a great example right here. So we see this giant fucking candle right here. Boom. Let's go back to black. So we see this giant candle right here. This is a great example of low effort, Jesus, come on. Low effort, high result. This guy right here. So this is, whenever you see something like this, where you see a large green candle on high volume, and at high volume I mean something that like is profoundly higher than the other candles, that is an indication that the move is sponsored, which means that the CEO has a vested interest in moving the market in a given direction. You know, we see it here, we see it here, we see it here. And then here is where you would have liked to take a short position, because we don't see these large candle spreads. We see the volume actually increasing, but the price is going up slowly, right? We don't see these large jumps, these jumps. It's just like this stair-stepping sort of thing. You know, it's going up, boom, boom, and the volume's going up, which means that on the way up, someone's doing a lot of selling, which would have been a great clue to go short here. I missed the short entries. I decided to go to bed, but this would have been a couple people in my group caught the short entry, and it was a great short entry, right? So something that will be very much in the corner of the bulls would be something like this: a high candle spread, high volume, green candle going northbound. That would be what you're looking for. And again, you know, I'm trying not to show my group too much, but you know, if you're interested in learning this type of analysis, I don't know a whole lot of people that are actually like delving into this kind of stuff as much as I am. You know, I'm sure they're out there, but I don't know of any. You know, go to bitcoinschmitcoin.com and you can join my trading group, and use the coupon code BEARHUG until the end of the month, where you can get $50 off your first month. I highly recommend it. You know, we've been getting a lot of people taking us up on the bear hug, and I think they're pleasantly surprised with like what you're getting out of the group, because I mean, I'll tell you this straight up. The group is not going to be a signaling group. It's not a group where people say, time to buy, time to sell. At least we're going to teach you how to read the market, because I think that's a more valuable tool than a short-term profitable trade. I don't think that's going to help anyone in the long term. I think it's just going to cause more pain than gain in the long term. But you know, if you want to learn how to read the market like this, how to jump in on trades like going long here, going short here, going long here, going long here, you know, join the group and we'll teach you how to do it. Everyone's welcome. But go to bitcoinschmitcoin.com. Coupon code BEARHUG. And you know, I mean, obviously, I wasn't very active the past week because I was moving, but and for the most part, I'm in the group talking with everyone almost all day. So I spend a lot of time in there because I spend a lot of time looking at the market and trying to understand and get a good feel for the dynamic of the market. So I almost always discuss my trades in there now. I didn't used to discuss my trades just because I didn't feel comfortable, but ever since I got doxxed a few months ago, and I made everyone sign a liability waiver, I now talk about it because I don't feel as guilty if people like follow me into trades. I obviously don't encourage people to do that, but I'm sure there's a small percentage of people that do that. You make your own kombucha at home? No, dude. But so one of my trading group was telling me how to do it, and it's like pretty easy. Like you just use like, you put in the what is it, like the yeast, or not yeast, it's the SCOBY. You put in the SCOBY, right? And you put it in with like sweet tea, and that's literally it. You flavor it and you make kombucha that way. That's, from what I hear, it's pretty fucking easy, and I need to do it because I spent a lot of money on kombucha, but it's okay. It's all about that dietary health, dog. Them probiotics, dude. Anyway, before I let you guys go, do you guys have any quick questions? There's a bird going nuts in the backyard. I don't know if you can hear it, but it's very annoying. You guys hear the squeaky chair? Well, if it's good for you guys, it's good for me. Again, go to bitcoinschmitcoin.com, use coupon code BEARHUG, and yeah, you can get $50 off your first month. It's good until the end of the month, so jump on it now if you're interested in joining. But for now, that's all I got for you guys. Yeah, I'll try to do a stream on Friday. There should be something interesting happening on Friday. And maybe I'll try to do a crypto and games pretty soon, because you know, I got that Google Fiber. I got the 1,000 up, 1,000 down, and yeah. So fuck net neutrality. Google's got my back. All right, you guys have a great rest of your day. Take it easy. Bye.